3M's juicy dividend may well get cut. No, you know what, Sherlock? Like, where have you been, living under a rock? The stock is down. This is one of the best quality businesses in the world, down 55%. You think that's not priced in? Now, you could say, no, it's not, because usually when they announce the dividend, you get a final flush. That could certainly be 100% accurate. But the thing is, you got asymmetry. Okay, so let's say worst case scenario happens, and they got to pay out $30-40 billion for all these lawsuits, which I think it's going to be half that. But let's just say that takes place, and they got to cut 100% of the dividend. Now, there's also a thesis they could borrow $30 billion, and then they don't have to cut the dividend. Let's just say they cut 100% of the dividend, which is our base case, by the way. Then you've got a business that compounds capital at 20% a year, that pays no dividend, but still compounds capital at 20% a year, and you're paying 10 times earnings. So tell me what's wrong with that. And then if you actually get a positive outcome and they don't have to cut the dividend, well, then the stock is, undervalued by 50%. And that's scary. So the way I think about it is, if they announce the dividend cut, most of that is priced into the 55% drop. So maybe it went from 100 to 80 for a few weeks because everyone panics out of it, and all these dividend aristocrat ETFs puke out the stock because it's no longer increasing its dividend like it has for the last 63 years. So you get a flush down at 20%. I really don't care. If I'm buying a business that compounds at 20% a year, whether I buy it at 8 times earnings or 10 times earnings, when I look 3 years out, I still got one of the best businesses in the world.